Welcome back, everyone, to the Risk Intel podcast, powered by SRA Watchtower, where we share risk intelligence with experts from across the banking industry. I'm your host, Ed Vincent, CEO at SRA Watchtower. Welcome back to the Risk Intel podcast. I am excited to have Claire Jordan from SRA Watchtower with me here again today. Claire, welcome back to the program.
Thank you for having me, Ed.
Claire, we talked about a few different things over the last couple of episodes. We talked about, firstly, collecting timely data on a frequent basis in order to, second, calculate a set of standard key risk indicators. That three are compared against a set of quantitative benchmarks. Now, the last link in the chain is then how do you consume these powerful analytics? So I'd like to dig into this topic in our conversation today, really about consuming KRIs, key risk indicators, and using them to enable risk-informed strategic and operational decisions. So let's kind of lean into this area, which I think dovetails well with your experience in the data and product area. Let's start by acknowledging that there are different stakeholders inside a financial institution who consume KRIs differently. So can you perhaps talk a little bit about how the different stakeholders consume KRIs within a financial institution?
Yes, most definitely. So we could break them down really into your three layers of defense. So your first layer of defense being your department heads, and the people who are really at the tactical level of risk management. And then obviously your second layer being your chief risk officer and your risk teams, and then your third level being your board of directors or your audit risk committee. So if we look at the first line of defense first, being at that tactical level, really needing a view of sort of each department's full KRI portfolio. Where are those risks? Really being able to dig into the detail. So if we're looking at reporting for this particular group, it's really having that visibility into the entire department and all the KRIs that are applicable to that particular area. That being said, there shouldn't be too much noise. So if we're an operational department, for example, do they really need to have visibility into other areas of the business, the compliance KRIs, for example? So it is important there, again, to have a tactical level, and we'll touch on this in a few minutes, but then also to have some control over what's visible there. In terms of the second line of defense, so the chief risk officer, for example, or the ERM function, their role obviously is to provide oversight there and to have a holistic view of risk at the organizational level. So looking at these KRIs will enable them to identify systemic risks, emerging risks, and really also to educate as well. So what do we do with this data? We've identified emerging risks. There's an opportunity for education throughout the organization. So it's a different level of information that they're using, but still having access to the tactical data when needed. Visiting then with the third line of defense, which typically would be your board of directors, your risk committee, internal audit. This is sort of obviously your more high level view of the data. So not being too tactical, we don't need too much noise, but having the ability there to sort of set strategy, align the institution's behavior with their risk appetite from a very high level. So does that answer your question, Ed?
That's fantastic. I mean, you hit a few things as I was furiously scratching down some notes here, right? That let me try and share some things back to you that I heard. So with the first line of defense, being able to drill down into the detail, but keeping it narrow enough so that it is focused on that individual department. So that to me sounds like visibility is one theme, right? Being able to get into the detail as in order to really understand what is driving a calculation or an analytic. But then secondly, having permissions in place. So I think you used the phrase, right, of minimizing the noise, right? If you permission that data so that they only see what they need to see, they don't necessarily need to see what that other department is doing. that's a distraction, that's noise. So it feels like with that first line there's both visibility and permissioning are two kind of key themes there. The second line, I was really kind of two words that stuck out to me were a holistic view, right? You mentioned, right, that risk department needs to see the big picture, and then they need to be able to educate. And I think that's a really interesting perspective, that they need that whole picture so that they can educate the organization. And then that third line of really being able to provide oversight, and so having that high level view. And so that feels to me like summaries and an aggregation, if you will, rather than and perhaps looking at, right, something that has moved versus a prior period, or something that's an outlier, right? You mentioned comparing to risk appetite. So I think it's interesting that, right, those are, you're all part of a single organization, but three very different use cases and three very different ways of consuming information. So let's pick up on this this theme, the theme of a dashboard and a report, because I know I've heard you mention that before, and those are different ways to consume content. So for those of us that perhaps don't live in this, day in, day out, how would you describe the difference between a dashboard and a report?
Absolutely. So a report to us here at SRA Watchtower is typically sort of a static view of data. And that could be varying levels of data, as we just visited. We talked about, it could be high level, it could be more tactical, but it's a picture, it's a snapshot of time. If we're looking at a dashboard that is much more interactive, it typically would allow the user to drill down. Let's pivot this data. We want to use this data to inform our decisions. And so, we want to look at it from different angles. If we see something that captures our attention or causes us concern, let's drill down and see, what is this trend? What's causing this trend? And so really, I think at a high level, we're talking static versus the ability to interact with the data.
All right, so static versus dynamic, for lack of a better term.
Absolutely.
What are the characteristics? So then let's kind of take each of those two ways of consuming, KRIs. What are the characteristics? What characteristics do the best dashboards, and then maybe separately, the best reports, right? Because maybe there's some similarities, but perhaps there's some things that are different. Yeah. But right, what are the characteristics do the best dashboards and the best reports exhibit?
Absolutely. So if we go back to the topic we were just talking about with the different layers of defense, permissioning is key here, because like we referenced earlier, we want to minimize that noise. We want, whether it's the report or the dashboard, to enable the user or the consumer of this data to use the information in front of them to inform their decision making. So they don't need the noise, as we just referenced. So the permissioning there is key. Also the ability to filter and drill down. And that could also be for a static report as well. Before we print this report out, we want to eliminate some of the noise. So let's drill down. Let's just look at a specific area of credit. Let's just look at those risks that are exceeding the risk appetite. So the ability to do that is key. And then I think also the ability to configure as well, really more so, I think, on the dashboard. So having the very easy to view charts and graphs with the ability to have some supporting information in there as well. We know that having this information is really to inform our decisions, not to make our decisions for us. So the ability also to include, for example, justifications, summaries to explain why is this particular KRI exceeding the appetite that we've set? Why are we outside of our risk tolerance? So the ability to show that information on a report, for example, is also key.
concept there of making risk-informed decisions rather than making decisions for you is a really interesting one, especially in the world of AI, right? That we live in, and that we're seemingly right decisions are potentially being fully automated, but the reality is here, right? There still is a level of expertise and experience that the risk officer is going to bring to the table, or that enterprise risk committee is going to bring to the table, or as you said, right, the first line defense, right, who's living in the business, making decisions day in, day out, having all of those involved to make a risk-informed decision by on top of the data. So permissioning, filtering, configuration, all really important characteristics. Let's talk about this permissioning concept in a bit more detail, because I think that there's a few different use cases that are interesting here, that I know that you try and solve for in the course of Watchtower's capabilities. But can you give us a couple examples, if you will, of how permissions could be enacted to control the exchange of KRIs between two different counterparties, and perhaps give us an example or two of two different parties that would be exchanging information there.
Most definitely. So referencing back to the beginning of our conversation, where we look at the different departments within the institution. We have the operational team, the credit team, the compliance team. So being able to restrict the information that is shared between teams, again, eliminates noise, but could also keep confidential information within the circle that it should be kept. So that's looking at within the institution itself. But then as we're looking at sharing data outside of the institution, we could use the example of a fintech. And so the fintech's risk assessment of its own operations, having the ability to share some of their risk profile with the bank, for example. There may be situations where they don't necessarily want to expose the entire risk profile for whatever reason. So having the ability to restrict permissions, again, it will eliminate noise so that the bank can focus on what they need to focus on with regard to the risk presented by that particular fintech. So I would say that they're two examples that would really show the benefit of being able to apply permissions to a tool such as SRO Watchtower.
Yeah, it's so I think those are two great examples. The concept of limiting access to confidential information is a really interesting one, and then the fact that you've got two counterparties there, that you may have a fintech that has information that they are trying to use to make decisions to run their business, that they want to share portions of that with a counterparty, as opposed to the whole thing. And so instead of having to keep those sets of data, if you will, or analytics in duplicate systems, having the right permissions in place allows you to share it seamlessly. I think there's one other scenario that I know that we've been thinking about is the exchange of information potentially between an institution and a regulator. Right? I know that we often encounter situations where an institution will open up their enterprise risk management tool set in front of the regulator during an exam, and they will use that framework and that tool set to guide the examination process. And there have been some instances where institutions have gone one step farther and said, well, could I use this platform to share information with the regulator? So that certainly is an interesting avenue to explore as well, to really facilitate that sharing of information between an institution and their regulator, ideally on a timely basis, right, with a standard set of KRIs, compared to a set of quantitative benchmarks. You put yourself in a position coming into that next regulatory cycle, and that exam, pardon me, to be able to say, all right, my regulator's up to speed. They know what's going on in my institution. So you know what? maybe this exam is going to take 25% or 30% less time and effort on my part as an institution because I've been transparent with my regulator
Yes.
on a more frequent basis. So I think that
Yes.
in that case, right, clearly you don't want to kind of throw the kitchen sink at the regulator, right? There's a lot of stuff that you're going to want to keep in-house, but perhaps there's some things that you say, I'm ready to share. Permissioning is key to make sure that you share the right stuff.
Most definitely. And I think it also allows for more proactive conversations. And if we look at this on a macro level as well, the ability for regulators to see this information from multiple institutions may also help them to identify emerging risks and systemic risks as well. So I think that the benefit is at the micro and the macro level in
Yeah,
that respect.
that's a great point. The micro and the macro there. Well, I think there's going to be a lot more to come on this topic of exchange of information between an institution and a regulator. I know it's a hot topic that we're exploring as a business as well. Let's take one other look at this, and I'm going to use some terminology here that I think we use internally. Maybe this is going to be slightly new for folks that are listening, but this concept of pivoting from hindsight, right, backward looking, to insight and foresight, which I think ties well into this concept of more timely data, more frequent data, and sharing it so that you can get ahead of an issue, perhaps with a regulator or between a fintech and a bank partner. Can you talk through how a stakeholder could model out hypothetical events and gain visibility into potential outcomes? Are there ways that you think about considering future events when you think about, again, kind of dashboard and reporting, and how do you consume this information?
Yes, most definitely. So the ability to look forward, obviously, you need to be able to create scenarios, that what if situation. And several of the partners that we work with will often reference a sandbox. But at Watchtower, we refer to it as a scenario. So the ability to say, what if? Now that could be with regard to the external environment, whether it's political, economic, or a proposed change in strategy. Internally, it could be an impending acquisition or merger. So that sort of what if. And again, this could be micro or macro. It could be just very small tweaks to the strategic plan. But the ability to take that risk profile as it is today and say, okay, now I want to model this for the future. And if we make this particular decision, what could the impact be? And obviously we're looking at data again. So this will potentially inform decisions moving forward, as opposed to this being static. But the ability there to sort of say what would happen if this particular economic event were to take place, or we were to change our strategy with regard to how we handle certain elements of the credit strategy. What would that look like? What would the risk be to our business? And so that really is the value, one of the values of having that forward-looking ability, which we offer within Watchtower.
And it feels like the three stakeholders you talked about before, right? The first line of defense, the second line, and the third line would all, right, have slightly different ways of considering those different scenarios, right? At that third line, it's going to be for strategic planning, maybe resource, right, allocation or capital investment, versus on that first line level, it's saying, well, boy, right, am I going to need to look at my risks and controls differently, and perhaps change some processes under a different scenario. So I think it's interesting to then tie the kind of the what if views in the scenarios and being able to push on certain pressure points back to, well, how do folks consume this, and how are they using these analytics to make risk-informed decisions at each of those three levels? Claire, we've covered a lot of ground here. Any other best practices that we haven't touched on that we should consider when consuming KRIs or using them to enact risk-informed decisions, as you said?
Yes, most definitely. I would say that consideration that this is data in front of us and it's informing the decision, not making the decision for us. But good reporting and good dashboarding doesn't just show you the data, it will also help you to decide what's next. So you should be able to walk away from working with a report or a dashboard and have a pretty good idea of the steps, the action items that need to be taken after you've worked with that particular data source. And that will also be, I think, where AI is going to play a pivotal role as we move forward in helping the user to say, okay, we have this data. What do we do next? And really, moving forward and using that to make decisions, to inform decisions.
That's fantastic. That's a great way to bring it all together. So, to recap this, right? We began the conversation here thinking about the different stakeholders and how they consume KRIs, right? At the more tactical level there for that first line, and thinking about visibility and permissioning, and then moving up to the holistic, if you will, and view there for that second line team that's also looking to educate an organization, and then for that third line, thinking about the high level view and the aggregation of data was a great jumping off point. You brought it all together there at the end with the concept of dashboards and reports, and the fact that right, it's not just about presenting data to those three audiences, but it's helping you decide what's next. And I think that right, there's whether you're exchanging information between a fintech partner and a bank, between divisions within a bank, between a bank and a regulator, and you've got the right permissions and filters and configurations in place. Ultimately, it's what do you do with this, right? How do you put yourself in a position to make risk-informed decisions, decide what's next? So I think that capstone comment of not just presenting the data, but helping you to decide what's next is a great way to wrap it all together. Claire, thanks for being here today. It's a great conversation, really insightful. Appreciate the time.
My pleasure. Thanks for the discussion.